What's the difference between being an employee and an independent contractor? I'll talk about that in this video. My name is Katherine Nally. I'm a CPA and I help accounting majors like you through graduation and beyond. The way people sometimes talk about this is by referring to both options by the tax forms you get at the end of the year, 1099 or W-2, and accountants especially tend to use that terminology. If you hear that, I want you to know what's going on, so let's talk about it. As an employee, you get a W-2 tax form at the end of the year, and as an independent contractor, you get a 1099 tax form. So working as a W-2 means having a job as an employee, and working as a 1099 means being an independent contractor, also known as being self-employed. I'll talk about the differences in tax implications for each of these in a future video coming out on tax day, April 15th, so keep an eye out for that. But there are more than tax differences between them. While every worker has to be categorized as one or the other legally, in practice, it's not always straightforward to say for sure which side a worker would fall under, employee or independent contractor. And there have recently been lawsuits about it. All of which to say it's not as straightforward as I'm about to make it sound, but I'll give you the broad strokes. There are specific laws that describe the circumstances for classifying workers as an employee or independent contractor, and I've linked to a few resources in the description if you want to read more about it. If a company tells you when and how to work, meaning telling you the specific days and times to show up, and training you on how to do some or all of that work, you're likely an employee. If the company gives you resources and tools to do the job, such as a work computer, printer, paper, ink, your software like Microsoft Office or Google Suite, maybe they give you a uniform, etc., you're likely an employee. While you likely, hopefully, engaged in some negotiation about pay, the employer ultimately is the final decision maker about it. As a full-time employee, you'll likely receive additional benefits also paid for by your employer, such as paid time off, health insurance, a retirement account, maybe free snacks in the break room, things like that. As an employee, you don't have to worry about drumming up business. It's your employer's job to give you things to do, and if you run out of things to do and have some downtime, that's your employer's problem. You'll make the same amount of money either way. If you're left alone to perform a task when and how you see fit, meaning if you want to do it at 2 p.m. on a Thursday or 2 a.m. on a Saturday, it doesn't matter. As long as it gets done before a deadline you might have agreed to, you're likely an independent contractor. If you use your own tools and supplies, meaning a personal computer and printer that you pay for yourself, including software such as Microsoft Office, Google Suite, and Adobe, you're likely an independent contractor. Importantly, while you may or may not have had some back and forth with the company about your rate, as an independent contractor, you have the final decision about how much you charge, and the company can choose to take it or leave it. You're also responsible for charging enough to pay for your own benefits, including time off, health insurance, and retirement. As an independent contractor, you're usually paid by the project or the hour. When you finish a project, you stop getting paid. It's up to you to find new customers to work with, and if you run out of tasks and companies to work with, that's your problem and you'll make less money. That's part of why it's important to charge enough to give yourself a vacation. Whether it's planned or unplanned, there will likely be periods of time when you're not working, and you want to make sure you've saved enough to continue to pay yourself during those times. As a quick example, let's say you want to make $1,000 a week or $52,000 total for the year. If you want to be able to take 2 weeks off and still make that $52,000 per year, you have to charge enough to actually make $52,000 in 50 weeks. So instead of charging $1,000 a week, you'll charge $52,000 divided by 50 weeks or $1,040 per week. There would be a lot more things to consider. Let me know if you want a deep dive on this in the comments, but that's the general idea of how you'd pay for your own time off as a 1099 worker. To quickly recap, there are pros and cons to both being a W-2 worker or employee versus being a 1099 worker or self-employed independent contractor. For the W-2, your pros is that the company provides your tools, you don't have to find tasks to do, and you get company provided benefits. The cons are you don't get to decide when or where you work, and your employer makes the ultimate decision about how much you're paid and what benefits you get. For 1099, the pros are that you have total freedom over when, where, and how you work, and you get to decide who you work with. You also have the final decision about how much you charge for that work. The cons are that you're responsible for marketing yourself and finding new people to pay you regularly, and you also have to pay for your own supplies and provide your own benefits. Which type of worker you'd rather be is ultimately up to you. I created a free quiz to help you think about if you would prefer to be an employee or self-employed, and I linked to it in the description. Let me know in the comments if you have any questions, and I'll see you in the next video. Bye!